Welcome back to Power Lunch. As we mentioned, the markets were attempting to continue to come back from Monday's rout, but right now losing a good bit of the steam. So should you believe in the bounce, or is it getting a little wobbly? Dom Chu is here to talk about all that and more in today's Market Navigator.
One of the questions we wanted to ask a lot of the folks out there, contacts that we know, experts, was if you could believe the bounce or not. And today it seems like
bounce.
Yes, yesterday's bounce. And even today, this morning, we saw a bit of a bounce. Could it carry over? So at least one of the street's top technicians, who's been bullish since late 2023, is actually starting to temper her view on what's going on. One of the key things she's looking at is the fixed income market. So let's bring in Katie Stockton, the founder of FAIRLEAD Strategies. She joins us now. Katie, you're looking specifically at certain parts of the market, including the long Treasury bond ETF, ticker TLT. What's it telling you, and why is it so important?
Well, it's really interesting timing, right? We have a breakout, of course, in TLT and other fixed income ETFs, and it comes at a time when equities have obviously seen some turbulence, and that turbulence should continue based on what we're seeing in our volatility metrics. So maybe a good time to look at these fixed income products, including TLT, which has cleared a very important resistance level on the chart. It's based on our cloud model. The cloud is a great gauge of the long-term trend, and you can see that price is now above that threshold, and it's there for a couple of weeks, which we like to see for confirmation of a breakout. TLT also happens to have what appears to be a long-term base in place in the shape of an inverse head and shoulders pattern. We're usually looking for head and shoulders tops, but this looks like a head and shoulders bottom. And that could mean that it has lasting implications. Of course, this is associated with a breakdown in Treasury yields, so we have to trust that that's a cyclical down move that we have underway there.
What kinds of return, if the thesis plays out and this becomes an even better investment, what kind of returns would you expect from it? What kind, if I were to follow your advice?
Yeah, initial resistance for TLT in particular isn't terribly far above. It's around 101.5. in price terms, and secondary resistance is well above. It's around 108 on the chart. So it could be a meaningful long-term turnaround that we have. We don't know what the returns will look like, of course, but we want to keep the long-term momentum gauges on our side, and they happen to be expanding in favor of continuation higher for TLT, whereas if you look conversely at the equity indices, they've seen downticks in things like their monthly MACD histograms. And those downticks tend to be decent times to be lesser in your exposure. So we've moved to a neutral long-term bias for equities, really with a time frame of maybe 4 to 6 months. So not very, very long-term, but just to avoid this increased volatility for now.
And do you see there's any kind of down, if you think it's neutral really quickly, just how much of a pullback could we see?
Well, for the bounce, we believe the bounce here, but just for the next week or two, and we would use that to reduce exposure. The 5,000 level for the S&P 500 is an initial support beyond the very near term. I think that could be jeopardized during the next down leg. Maybe we get a seasonal corrective phase into September, but I don't think we'll see back to the 4,800 area where there's secondary support.
All right, Katie, our Market Navigator, thank you very much. Dom Chu, thank you as well.